Thank you all for joining in. The webinar will begin shortly. Good afternoon and welcome to today's webinar. We have with us our Chief Product Officer, Mr. Karan Batra, who would be helping out with the concerns with respect to our IP, like the checks and balances we make before making our IP live, and how we change the IP to make it relevant to the current market scenario and ensure that it outperforms the market. But towards the end, he would also be answering to some of your questions. Over to you, Mr. Karan.
Thank you, Supreet. Good afternoon, everyone. Thank you for joining us today. Like Supreet said, so what I will do is I will take you through how we rate companies, and what do we look at, how we modify, how we keep monitoring our IP, and what is the outcome of that. And towards the end, I'll take your questions. So any doubt you have about any of the sections, you want more, let's say, information on any one particular section, one particular feature, I'll be happy to answer. I would strongly urge that you please stay for the Q&A, because Q&A is usually very interactive, and any doubts you have, we'll try our best to accommodate all questions. So first, how are stocks rated in Markets Mojo? Now, when we started Markets Mojo around 6 years back, we saw that there was a big gap in the market, that people did not have access to high quality research. When I'm saying access, I'm not saying they did not want research, they just did not have access. So a typical broker will not cover more than 100 or 200 stocks. People were usually investing basis tips. So tips, a stockbroker gave a tip, or some expert on the TV channel gave a tip. People putting their hard-earned money behind these unsubstantiated tips, so to say. And behind every tip, someone does have a hidden agenda, right? A broker will make money if you churn your portfolio. An expert is saying something because he might have holdings in that and he wants to pump up that stock. So everyone does have a hidden agenda whenever they're giving you any tip. So that's why we created Markets Mojo. Our whole idea was that you invest wherever you want to invest, but please check once so that you're taking an informed decision. You're aware of what you're getting into. And that's where the idea of Markets Mojo started. And we wanted to create this unbiased data-driven engine. Now, the word unbiased is very important. We don't let our own assumptions cloud our judgment. We go only by what the data is saying. We don't believe in stories. We don't do any future projections. We see if what people are saying or what management is saying may or may not come true, right? So we say till the time it does not reflect in the numbers of the company, you will not believe. So we might be late, into getting into the stock, but when we get into it, we know that we're sure about what the company has delivered on its promises. Many times people say that, okay, I picked up this stock because I saw this, then I felt that, if this happened, then this should happen and this should happen. That's why I picked this stock. All this. And they would always talk about these success stories of how they connected in the market and, which stock they picked up. But they will not tell you about the 9 places where this did not play out. They'll tell you about that one place that did play out. So we do not believe in stories. We do not believe in making assumptions. When it will reflect in the numbers of the company is when we will say it's a good stock. So we're looking for validation from the company's financials and from the market in terms of the valuation and technicals. So how do we do? How do we rate the companies? We look at almost more than 550 different parameters on any company on a daily basis, which is more than 30 million data points across the market. Now, this analysis is across the fundamentals, the results, the technicals, the sector, the price, and it all gets crystallized into the 4 key dots of quality, valuation, financial, technicals. Now, we'll take you through details of each of these dots. And we've seen a high success rate. When I say success rate, you always measure it versus the benchmark, because if the market is up 20% and we're giving you our stock gave 15%, we don't say it's a good call, because you could have made 20% in the market straight away. We've seen a very high success rate in the strong buys and strong sales categories. So what are these 4 dots? Let me give you a brief first, then I'll take you through maybe one stock. We'll go through a stock and I'll tell you what we're looking at in every stage. So the 4 dots, the first is the quality. Quality is the long-term fundamental strength of the companies. Quality and valuation combine as the long-term drivers. What long-term drivers are doing, they're looking at around slightly longer-term fundamentals, and they're looking at consistency of performance. So looking at consistency helps to bring down the risk of your investment. And near-term drivers are financial trend and technicals. They're looking at the momentum in the fundamentals as well as the price. So they help to catch the returns. So long-term drivers help to lower the risk by looking at consistency, And near-term drivers help to push up the returns by catching the momentum in the stocks. Let's go through a stock and we'll see all these factors at play. So maybe so when you come to a stock page, you'll straight away see what our call on the company is and what the score. The score is a combination of all these 4 dots, and we'll go through how this is calculated. And on every company, you will see a grade from strong sell, hold, buy to strong buy. The dashboard, the first level of research will tell you if the company is rated buy, why is it rated a buy, or why is it rated sell, what are the factors working, what are the factors not working for a company. Now let me dive into straight on the 4 dots. First is the quality. Now quality is the long-term fundamental strength. When we're looking at quality, we're looking at consistency of performance. So, one quarter, good results or bad results will not change the quality. It takes time to change the quality. So we're looking at consistency of performance. It has 3 key factors. First is the growth, which is the long-term growth in top line, bottom line, operating profits. What we're looking here is again long-term consistency of growth. So not just one period growth, but it has to have done over a long period of time, good growth. Second is the capital structure, which is mostly the debt ratio, the debt serviceability ratio of the company. And third is the management risk, which is one of the most important factors in quality. What management risk is looking at, so we don't say who's behind the company. We're not here judging who the management is, what is the qualification. No. What we believe is, if the management of the company is good, it will reflect in the numbers of the company. And the company will be growing efficiently, consistently over a long period of time. Ratios like return on capital, return on equity, return on assets will be consistently positive. The level of pledges in the company are the profits of the company real? Is it paying out taxes? Is it paying out dividends? We also put in external parameters like what is the level of institution holding in the company? What is the level of domestic funds in the company? So we keep on adding new and new features depending on the market scenario. So I'll give you an example. A couple of years back, there was a company which was, the financials were looking very good. The company was growing at a very fast rate. The stock price was rocketing. It was a large cap at that point of time, more than 25,000 crores of market cap. But there was always, some suspicion in the numbers of the company. So we looked at the numbers again more keenly. The institutional holding was high, but the domestic mutual fund holding was very low. So on ground, fund managers were avoiding the company. And we realized that the high investment was through FIIs, and that through also very few FIIs. So we thought there may be an element of round tripping which is happening. So we put another filter that for a company to be good, there has to be a minimum level of domestic mutual fund holding. So on ground research has to be high. And now when we put this condition applies to everyone, all the stocks, other stocks also we were able to catch because of this. So we keep on improving new factors and provided that makes sense at theoretical level and also practical level. Is it improving our performance or not? Quality is a very important dot for us. It acts as a gatekeeper. What I mean by that is, if the quality of the company is not green, at least good quality, it will never qualify as a Mojo stock or a top rated recommended stock. So even if all the other dots are very positive, if the quality is not good or excellent, it will not qualify as one of our highly rated stocks. Second long-term parameter is the valuation. Now, this is a good example because what I want to stress here is valuation is one of the parameters that goes on to define the overall score and call on the company. So even though Mindtree is very expensive, it is still rated a buy. So valuation is one of the factors, but it's not the only factor. So don't base your decision on one dot individually. Look at the overall call of the company. Now, when we calculate valuation, our underlying hypothesis is if the company is fundamentally strong, it can justify even higher valuation multiples, but a weak company cannot even justify lower valuation multiples. So we don't just say that, okay, a P of above 20 is expensive or below 5 is cheap. No, a good company can have P of above 20 and still be attractive, but a weak company cannot even have a P of below 5 and still and it can still be expensive. So we look at a relative valuation model. It has three factors. First is versus the fundamental, which I just told you. Second is versus its own past. So we look at where the company is trading today. Has it become more expensive versus its past, or has it become cheaper versus its own self by looking at the past? And third is versus its peers. Combining these three parameters, we come out with our valuation model. So quality and valuation are the longer term drivers. Third is the financial trend. Now, financial trend is the results momentum, the fundamental momentum of the company. What we are measuring here is how good were the latest results of the company. What we have seen, if you see this graph, companies which have consistently done well, the market has rewarded them in the long term. Now, to measure financial trend, what we look at, for example, let's take sales. So we look at the quarterly sales and we say, okay, is the sales highest in the last 5 quarters? Has it grown consistently? What is the rate of change? What's the rate of change versus its own past versus its peers? Then we combine last 2 quarters and say, okay, what is the trend in 6 month sales? What is the trend in 9 month sales? What in annual sales? The margins, so multiple parameters. So this is just one factor. So this goes across all the factors of results, P&L, cash flows, balance sheet, ratios, shareholding, all the factors combined. So there are different thresholds at every level, and we give a score. So higher the score, the better it is. And so this is the latest results trend. So this catches the financial momentum in the stock. And the fourth factor, the last factor, is the technicals. Now, technicals for us is not a very short term or a very intraday technical factor. We look at slightly longer term parameters. That's why we look at, if you see here, we mentioned the weekly and monthly parameters. Only moving average is one factor which is measured on a daily basis, but rest of all the other factors are measured on a weekly and a monthly basis. So if you see the overall technical on the company turned bullish first time in June at 920, today it's 4,200. Since then, it has moved in bullish and mildly bullish ranges. Technicals for us is like an enabler. So we do not look at just the company on technicals. If the fundamentals of the company are strong, will we look at the technicals of the company? Now, when I said that we should look at the overall call on the company and not just one factor, why that is very important. How we have designed our whole model is that we look at a stock from different angles. So all these quality, valuation, financial and technicals, all these 4 dots are analyzing the stock from 4 different angles. So quality is looking at the long-term fundamentals. Financial trend is looking at the latest results. So if a company latest results were bad, it does not mean the overall quality will fall. But if the latest results are bad consistently, it will say that, okay, now the quality is about to turn. So they're both looking at different factors, how stable the company is and how it is doing currently. Similarly, valuation technicals. So if a company goes up, it goes above beyond its fundamentals, it will start becoming more and more expensive. While at the same time, technically, it will start becoming more and more bullish, right? So these both will work in a way to cancel each other out so that one doesn't have a bigger impact. We combine all these 4 dots because they very nicely come together in analyzing a stock from multiple angles, and that's why we give the overall call. So now coming back to our analysis, the score I said is a combined score. Now weight of each dot is defined by the market condition. Now what I mean by that is we constantly monitor our algorithm to see what should be the weight of each dot. Now if we see that the weight of now the market is reacting more to quality, the weight of quality in our analysis will increase. If we see the market is reacting less to valuation, then the weight of valuation increases across the stock. It's a very dynamic model that automatically adjusts depending on what the market scenario is. Now, how do we analyze this? How do we measure this performance? We have our grades of strong buy, hold, sell, strong sell. We create a daily index of these. What I mean by this index is, let's say today there are 20 stocks rated strong buy. We'll have these 20 stocks in a basket. Tomorrow there are 21, this one stock gets added, then there are 19, these stocks get removed. So depending on what the composition of this index is on a daily basis, we create a NAV of these stocks. This is very similar to how, let's say, Sensex or BSE 500 is calculated. It is that the stocks can come and out on depending on daily basis if the call changes. So we create this index and we look at 5 key tests. First is a periodic absolute return. So we take the overall 5-year period and we see that, okay, what is the distribution that we need? We need the distribution that are strong buys, should return better than buys, should return better than hold, better than sell, better than strong sell, right? So this is the distribution that we're looking at. Second is the relative return. We always measure it versus the benchmark. So our strong buys and buys should return better than the benchmark, while our sell and strong sell should return worse than the benchmark. Third is consistency, which is very important for us. We don't just look at the entire one period because it's possible that, only in the last period there was a spike and that's where all the returns were good. We look at consistency of performance. So what we're looking at is, let's say 2017, what was, again, did this distribution hold? What was the relative performance? Did it beat the benchmark? Did not beat the benchmark? What happened in 2017, 18, 19, 20, 21? So we look at this on a periodic basis. So consistency on different periods, not continuous period, but different periods of, is this relationship holding over different time periods in different market scenarios as well. Next, the drawdown. Now, drawdown is the maximum loss anyone would have suffered in the entire period. So let's say someone came in the absolute peak, went out at the absolute bottom. What is the maximum loss they would have suffered? Our strong buys and buys should have a lower drawdown than the benchmark, or near or lower drawdown, while sells and strongs should have higher drawdown, which means that sells and strongs should have fallen much more than benchmark. And finally, the success rate. Success rate is when we said the stock is a buy or strong buy, it should have done well, or it should have made profit, it should have beaten the benchmark. And we say when we said sell and strong sell, it should have made losses or underperformed the benchmark. So that's how we define the success rate. So we monitor all these 5 parameters on a very regular basis to see what is the overall performance and what should be the weight defined to each of the dots. So this is how individual stock is evaluated. Now, to suggest the recommendation of which stock becomes the part of a Mojo stock or a recommended basket, there are even more filters. So you would have noticed that not all buyers and strong buyer stock are part of the Mojo stock. For a stock to qualify as Mojo stock or become in the pool of investments, it has to pass through multiple other filters. First, like I said, the quality has to be good or excellent. Second, in terms of the other dots, there should not be extreme barriers like CFD, financial trend should not be, let's say, very negative. There are some liquidity barriers. So, because we don't want that we recommend the stock and there is no liquidity, you get stuck. So there are minimum liquidity, like a minimum trading volume of the stock should be there. That's why maybe a lot of micro caps, small caps might go out. When the stock is eligible to become part of this list, it should be in the top 20 highest rated stocks in the market cap. So let's say the top 20 rated mid caps, top 20 rated small caps can qualify to become Mojo stocks. Once the stock passes through these tests, so it has to have a high score. It has to have these 4 quantitative parameters. Every stock is also vetted by our investment committee. So they're looking at investment committee headed by our CIO, Mr. Sunil Damania. They're looking at 2 key factors. First is the corporate governance audit in terms of, is there something that the numbers are not able to catch, but there is, news in the market about some corporate governance issue, or the business case going forward is not very strong. Only in these cases can they stop a stock from becoming a Mojo stock. They cannot add a stock on their own. They can't say, okay, I like this stock, let me add this. No. The stock has to be highly rated stock. They can only not allow a stock from becoming Mojo stock. So that's why when we say that these are highest rated stocks, they're quantitatively very good and they've also passed a qualitative filter. Now let's go through what the outcome is and how our IT has been performing. This is the last 5-year annualized return of those indices that I was telling you about of our strong buys. This is the annual return. So benchmark BSE 500 in this period is up 15% on an annual basis. The strong buys are up 85%. Buys 50%. Sell has underperformed the market at 13%, and strong sell not only has underperformed, has given negative returns. The next is the drawdown, which I said the maximum loss. Strong buys and buys are around the market or lesser, right? The buys minus 32, strong buys minus 39 versus minus 38. But if you see the sell and strong sell have fallen much, much more. And if the success rate of strong buys and strong sell is very high. So And that's why we are very confident when we tell you that, okay, you have to exit this stock and maybe enter this stock. Why we're very confident? Because we've seen this distribution happen over a long period of time. Now, what is important is long period of time. In near term, in small stretches, there might be periods, where this relationship does not hold, but you have to have a consistent output. Now, when we ask you, okay, maybe get out of the stock and get into the stock, it's possible that the stock we asked you to get out of went up. It's completely possible. Like I said, you have to look at it over a long period on a consistent basis. What you have to look at is, okay, the stock went up, but the stock which was replaced, did that go up or not? Because what we are telling you is to get into a more fundamentally sound stock. It is possible it may not always go up, but over a long period of time, you have to not just one-off incident, you have to see it over a long period of time on a consistent basis to then make up your mind. Okay, now let's go ahead. So what we did is looking at the same data on a quarterly basis, we defined the market or what happened to the market in this quarter. So above 2%, we've said the market was up, below -2, market was down. Across these period, whenever the market was up, the strong buys gave positive returns, but the strong sells only gave positive returns 50% of the time. That's it. So even when there were tailwinds, the strong sells did not do well all the time, and strong buys outperformed 86% of the time, while strong sells only outperformed 36% of the time. But on the opposite side, when the market was down, strong buys still gave returns 75% of the time. Market was, let's say, -2, -4%. Strong buys were positive. And even when they were negative, they outperformed 100% of the time. They outperformed the market, even when the market was down. But if you see the strong sells, when the market was down, they always gave negative return, always much worse than the benchmark. This is how it will look on a graph. Now the graph scale, because of the strong sell performance, looks very very lopsided. If you see, this is the drawdown period. Now there was drawdown in this period. So this is March 20 corona virus time. So this is actually a good period for us also to test our model on a real-time basis, because that wasn't a live scenario where we saw market crashing so much. Otherwise it was always backtesting this, but this is action market scenario. In this time, what happened is we fell. Okay, market fell, we also fell. So there is drawdown here, but with the scale you're not able to see. So our portfolios also went down, but we did not fall as much as the market. And the good thing was, okay, when they went down, the churn in the portfolios increased slightly. There were more sell calls, and we were able to get into stocks that were looking good at that price point. And from that level, when the market bounced back, market came up, our portfolio just skyrocketed from that point onward, because at that low level, we were able to get into stocks which are looking very good at that point of time. So if you see the scale, now the market has gone from 100 to 218, so it has doubled, slightly more than double. The strong sell have actually lost money for you, and strong buys have made you multiple times. And this, like I was telling you about the calendar year performance. Now, if you see 2018, strong buys, better than holds, sell, strong sell, and market was negative in this time. 2019, similar scenario, market was positive, but all the distribution, if you look at this. 2020, again same. Now 2021, now this has been a slightly different year. The level of outperformance till now, so if you were talking a month back, the level of outperformance was much higher here also. But in the last 1 month, the strong buys have not done as well, and as much as the market has gone up. And the reason for that also is there's a lot of profit booking which is happening. All the stocks which were doing good, which are fundamentally good, people have made money. They just want to capture that profit because the market is at an all-time high, right? So because of that, there has been profit booking in these stocks, and that's why you see that in the last 1 month they have not done as well. But again, I really feel there's a temporary phase of the market. Over a long period, you have to see. So here, even though the last 1 month has not been, they're still doing much better than the market. And let's see by the year and where we end up, because we've seen this relationship happening continuously over multiple years. What has happened to model portfolios? So we have 3 model portfolios on the site: aggressive, moderate, conservative. If I'm sure you're aware of model portfolios, but I'll just give a small brief on model portfolios. Model portfolio is what we call the zero headache investor. So there are 3 model portfolios available on the website depending on your risk profile. You can choose whichever you want. You can create up to 5 model portfolios. The difference is in terms of allocation, like aggressive would be a 10 stock portfolio, it can go up to 40% in small and micro caps, while conservative will be 15 stock portfolio and it will never go into small and micro caps. So the difference in terms of allocation in these strategies, depending on what you're comfortable with, you can choose a model portfolio. Model portfolio helps you create a new portfolio based on the best stocks at that point of time and helps you manage that portfolio continuously over the life cycle. So here are the returns that I showed you, right? You will find a difference here. And the reason is this is stocks which are coming in and going out on a daily basis. So it's very difficult to, always keep selling, buying, and the stocks can be different. You have to put more money, take out money. This is a portfolio that we've created. It is automatically monitoring it and it will tell you, okay, now you exit the stock and enter the stock. So it's a very easy way to manage. Still the performance much, much higher than the benchmark. Now this is over 5.4 years since we started tracking this model portfolio. The performance is annualized 46% of an aggressive versus 17% of the market. Market has done 16 to 17% in this period. All 3 are different benchmarks. All 3 portfolios are done handsomely beating the benchmark. And if you see the drawdown is also in line, or as you go down, the drawdown also keeps becoming better than the benchmark. Now, when we look at model portfolio again, we look at from a calendar year basis. Now, all portfolios have done consistently well if you look at the calendar year performance. Now, one very important factor I want to highlight is this performance I'm showing here is of a portfolio 5.4 years back. So it's like the first portfolio that we created, and we are, updating this portfolio on a regular basis. It's continuously automatically updating. The individual portfolio returns might be different, and people did write to us that, okay, you're saying this, but my portfolio done something else. So I've also done a comparison of actual portfolio. So this is the model portfolio, the back-tested portfolio, or you can say the first portfolio that is continued. So this is a portfolio that already has holdings and then it's continuing from their levels. I will also show you new portfolio performances. So this is the performance on a calendar year basis. Every year, again, the portfolio is done much better than benchmark, even when the market was negative. But like I said, the last 1 month it has not done very well, and that is because of the profit booking that we're seeing in the market. However, even discounting this last 1 month, where it has underperformed the benchmark by almost 5%, if you look at 3 months, 6 months, 1 year, 1 year is 101% versus 62%. So what you need to keep in mind is you need to be patient when you're investing in stock market. There will be ups and downs, but you have to have a longer term perspective. Similarly, moderate portfolio done extremely well in each of the calendar year returns, even when the market is negative. Again, in the short term, it has not done very well, but if you see the long term, it has outperformed in a big way. Conservative portfolio, in 2018, it underperformed, but otherwise it has done well in every other year, calendar year. Similar story, in the last 1 month, it has not done very well, but if you see 3, 6 months, 1 year, it has done much better. Now, like I said, I'll also show you what happened to actual portfolio. So here what I did is I took actual portfolios that were created 1 month back. So this is a portfolio that was created on 30th August, a new portfolio on the 30th June, a new portfolio on 30th of March, right? So in 1 month, 3 months, 6 months, and what has been the performance of these actual portfolios? So this is what, you will compare your portfolio to, right? Because you started your portfolio maybe 1 month back and you're saying, okay, my returns are very different. The portfolio 1 month back is doing well in all periods except conservative, but 3 months have been negative. So slight, I'm telling you, in the nearer period, there has been underperformance. But again, if you see the 3-6 month period, which is slightly longer, even discounting this 6 month portfolios have done extremely well. So the only thing that I want to tell you today is that you have to be patient when you're investing in stock market. You have to give it time. In the short term, there will be ups and downs, but you have to have a longer term outlook. Even though it is negative, versus the benchmark, the portfolios are all in positive. So it's not like you're making losses in the portfolio. Okay, now let's come to Mojo stocks. Just to give you a little primer on Mojo stocks, these are the Mojo stocks on the website. Now, these are the top rated stocks across the market. If you go to large cap or mid cap, you'll see the stocks like Mastech is there. It's getting 558% return since the time it became Mojo stock 14 months ago. Now, every stock, the day it becomes a Mojo stock, starts getting tracked and the performance will be live on the website. And this is completely transparent. So you can see some which are negative. Like I said, it's completely transparent. If you go to full list, you'll see all the stocks which are currently there in the list. Also the ones which have moved out. So the ones in white are the ones which are not there in the list anymore. So Saregama went out in August after being there for 9 months, giving 380% return versus market of 45. Now, if you go down, like I said, it's transparent. Even the stocks that gave negative return, all I mentioned here, you can see versus the benchmark what the performance was. But if you see the number of reds versus the number of greens are far more than reds, and the quantum of performance as well. Maximum loss was some 20-odd%. Maximum gain is 557%. So you always have to look at it in context. Now, what this table is showing you, what we did very simply is we took this table also. So this is completely verifiable by you also. We took this table and we said, okay, let's put 100 rupees in each stock and 100 rupees in the benchmark and see what happens. So it's not a continuous period. It is only that, okay, I'm putting 100 rupees in every stock. One stock I'm putting for, let's say 1 month, whatever time it was in the Mojo list. In one stock I'm putting for, let's say, more than 1 year. So time does not matter. It's just that the returns I'm putting. Even by doing just this simple analysis, you would have made an alpha of 14% over the benchmark. So this simple strategy will give 28% versus 13% of the market. In mid caps and small caps, this is even higher the level of alpha. Now, what is the inflection point? How can you make your own strategy now? So what we realized is the longer the stock stays a Mojo stock, there's a very high chance that it will give much higher return. So if you see the overall period, stocks that have moved out in less than 10 days or have just been added, they do not really have any performance. 10 days to 1 month also varies almost with the benchmark, no real success rate. The inflection point comes when you go down. So more than 3 months, there you start seeing the alpha here. If it's more than 6 months, it multiplies. More than 1 year, much higher. So the longer the stock stays, the higher the alpha or the higher the outperform the stock becomes. Now, inflection point is again similar for large caps, is slightly longer, it's 6 months. For mid caps is like 3 months. So it's a different market condition also define this, but a general rule should be at least 3 months that the stock has stayed. There's a very high chance that it will be a multi-bagger. It will give very high performance. We also want to do one analysis now. This question comes to a lot of people like that. Okay, I want to get into this stock, but it is already given more than 100% return. What should I do? Can I still get into this stock? So we want to do this analysis, and what we realized was we took stocks that were there in the list for at least 3 months. So from here, we knew that, okay, 3 months is the sweet spot. We took 3 months and we said, okay, these stocks what have they done in the first 3 months? So we realized the stocks that have given reasonably good returns in the first 3 months have continued to perform even higher going forward, right? So stocks that gave more than 20% return in the first 3 months, post that on an average give 33% return with a very high success rate. This goes even better when it is above 50. They did well in the first 3 months. They gave more than 50% return. They gave much higher returns even going forward. Now, this relationship we saw across the market caps, not just in one particular market cap, but across the market cap, we saw this performance. So what you can do as an ideal strategy, look for stocks which have consistently been Mojo stocks for long term and have done reasonably well in the initial period. They are very likely to do better even going forward. The stocks which did not give performance in the first 3 months, even though they've been Mojo stock, they did not really do well even after being Mojo stocks. Now, just to give a little perspective, in 2021, financial year 2021, we took the top 15 stocks by performance in the BSE 500. Of these 15 stocks, 4 stocks are Adani Group company. Now, Adani Group companies do not qualify as a high quality because of the low fund holding criteria. So if you remove those, out of the remaining 11, 6 were Mojo stocks at different points of time. I'm going the opposite side. These are the 10 worst performing stocks. None of the stock was a Mojo stock at any point of time. So we were able to identify the winners and avoid the losers at the same time. How to create your own strategy when you are following markets Mojo. First is when you're doing individual stocks, please follow the call because, and why again, we're very confident because we see in this relationship, we study the relationship, we modify the weights of the dots depending on the market scenarios, and we know how these are performed. So in one odd case, if you say, okay, this stock, that is possible, but you have to look at an overall level consistently over a long period of time to then really realize that, okay, the advice that we're giving has worked for you in the long term. If we ask you to sell, always compare it with the stock that we asked you to buy. Take a portfolio approach when you're doing Mojo stocks. If you're picking the stocks that come in the first, if you're looking at those stocks, take a portfolio approach. Don't put all the money in one stock. Take at least 10 stocks. Have a portfolio of at least 10 stocks, and don't put more than 10% in a stock and not more than 30% in a sector. Now, if you do not have the time, we highly recommend please go for the model portfolio because the model portfolio, it is monitoring that portfolio for you 24/7. Whenever a change is required, we will tell you, we will alert you via email, via mobile app notification that you have to sell this stock now. This is the replacement stock that you have to buy. Before we go to the Q&A section, I want to highlight this very special offer that we have only for people who are attending the webinar. The 2-year pricing on the website, if you go, is 40,000 rupees, 39,998. Only for people who are in the webinar, we're offering 2 years at 24,999, which is a huge discount. And 24,999 is for if you want mutual fund. If you do not want mutual fund, it is even lower at just 19,999 for 2 years, which is half the price of what you will get on the website. This is only for people who are in the webinar, 19,999 for 2 years, which is a 50% discount. Now, if you are already a paid member and you subscribe, the subscription gets extended by 2 years. So if there's 1 year remaining, if you pay for this, it will be 3 years from now. If you're not a subscribed member, these rates are not available on the website also. These are very, very special prices only for people in the webinar. We'll put the links in the chat box, right now, and we'll also send you an email after the webinar to subscribe. Please take the opportunity to subscribe or extend because you will not see these prices in the near future. With that, I'll open the floor for Q&A.
I've dropped the links for the professional offer, that is the 19,999, as well as the professional offer plus the mutual fund as well. Starting the Q&A section, we have the first question from Mr. Naizad Desai. You have been saying that 5 model portfolios can be created. So does this mean that our personal portfolio is also included that, or is it separating the model portfolio, personal portfolio?
No. So your personal portfolio in the portfolio analysis section is different. There you can create 5 your actual portfolios, and you can create 5 model portfolios. Model portfolio is a virtual portfolio, so it will automatically keep on updating. And you can put the actual transactions that you've done in the portfolio analyzer. I'll just show you. So these are not linked. These are all different. So if you go to the portfolio analyzer section, here you can create up to 5 accounts and have your actual transactions. And you can also go to the model portfolio. And here you can create another 5 model portfolios. Now here you cannot update the transactions, but you can create and follow these 5 model portfolios. Up to 5. If you want to delete one, you can always delete by clicking here and generate a new one. But up to 5 portfolios and up to 5 models.
Okay. Question from Ashish. How can you optimize your mutual fund portfolio using the mutual fund screener?
So currently, on mutual fund, what we've started is rating each fund. So we do not have a model portfolio on mutual fund or a optimizer on mutual fund, but those are our plans for the future. So next step, what we want to do in mutual fund is to have a model portfolio on mutual fund like you have here. So we'll be able to guide you if now you have to get into this fund or get out of this fund and actively manage your mutual fund. And next we'll work on is a wealth optimizer, where not just, so currently we have equity stock optimizer, but when we work on a wealth optimizer, we will optimize all your entire assets, including your equity fund, debt fund, other funds, and your direct stock holdings. So those are our future plans. But currently what we have on mutual fund is the rating on every fund.
Okay, we've got two questions on Infinub. I'll take the first one from Lakshmi. Hi, I am subscribed to Infinub. Where do we have all the top 10 top 10 stocks? And if I buy all the top 10 stocks in my portfolio, in case, let's say, if a stock goes out of the top 10, then shall I sell this? Is this a wise strategy to do an investment?
So if you, Infinub is a website that we've created, which has analysis across global markets. So 20 plus markets are in Infinub. So let's say you're looking at the US market. So you can get hub stocks. Hub stocks is equal to the Mojo stocks that we have on Markets Mojo. These are the top 8 stocks across the market, top 10 large cap, mid cap. What you can do, sir, so one is, you can follow this strategy, but these are lists. So the stock will come and go out because let's say another top 8 stock comes in, or maybe just a small factor change and it goes out of this, because there are other ideas in stocks. Here also you can create model portfolio. So we have model portfolios across across 6 markets now. And in US, there are 4 different strategies. So you can use the model portfolios here itself to create and manage the portfolio, because it will guide you of what next step you need to take in your portfolio.
The next question on Infinub is Lightspeed POS is buy, and this company has inflated numbers as per Barron's. Could you take me to the Infinub website and show me the analysis of this company, please?
So you can go to Infinub and you can search any stock here. Again, very similar to Markets Mojo, and you'll see our parameters of quality valuation. So what was the name of the company?
Lightspeed POS.
So this company is rated a buy currently in our system, but the quality is average. Valuation is negative. Financial trend is outstanding. That is the main overriding factor, and the technical currently is bullish. Now, if market is really falling, it might change with the current prices. But what you need to understand is if the company is inflating the numbers. Now, here we are really dependent on what the data the company is publishing, and what we're relying is that the numbers are accurate. If the company is inflating the numbers, that is a limitation, because there we are a quant-based model. What we can do is we can put checks and balances in terms of quality evaluation. We can see what the overall analysis is. So in this case, also the valuation is not calculated because of negative operating profits, and the quality is average. But because of the short-term momentum, the stock is still rated a highly rated stock. So if the numbers are inflated or the numbers are not accurate, then there is a limitation, because what we do is we look at the numbers of the company and do our analysis on top of that. So, what we are kind of here relying on is the exchanges are doing their job, the auditors are doing their job. If that doesn't happen, then it becomes really difficult, because we're a quant-based model.
Okay. Question has come in for Infinub as well. Since fractional stocks can be purchased in US, can you enable the model portfolio generation with 1,000 or 500 USD?
We will be reducing the amount in the US portfolios, maybe not to 1,000. So additional investment we are putting at a much lower amount, but the initial we might still keep at 10,000. But you're right, the fractional shares are available. So we are also thinking of how we can optimize it better, because then by country we have to change our logic. So we are kind of trying to build that in the model itself.
Question from Sanjeev Gupta. Do you feel you should have a higher weightage to valuation, quality, business growth, and profitability, that is the margin expansion? I think it will be a good for long-term wealth creation for investors.
So again, sir, this weightages that we give are really depending on the market scenario. So like I mentioned here, what we are constantly studying is the correlation of different factors with what's happening in the market. So if you see that the correlation of the market is reacting more to quality, the weight to quality increases. But if you see the market is now reacting more to valuation, then the weight to valuation increases. So this is a dynamic model that adjusts with the market scenario, and dynamically will the weights get adjusted on a periodic basis depending on what the market is currently reacting to. But if you see over the last few years, the valuation has not really worked in the market. Most of the growth has happened in kind of growth related stocks, and valuation, the value fund or the value investing has not really worked in the market for the last couple of years. But so the model is automatically adjusting for these cases.
A question from Ajay Gupta. Why have we restricted the portfolio to be only up to 1 crore?
The model portfolio, so you can create up to 5 model portfolios. You can put 1 crore in each. So why we do that is to kind of maintain the level of liquidity and in each portfolios. But you can create up to 5 model portfolios. In each portfolio, you can put 1 crore. So you can go to 5 crores in
that. Okay. Question from Mr. Anil Kumar. Add cash in portfolio and add investment in modern portfolio are having the same IP feature or a different IP feature?
So it is similar, like the pool of the stocks is similar, but there can be slight differences because what happens is in the portfolio optimizer, we have 5 profiles of very aggressive, moderate, conservative. They have different weightages internal towards stocks and the market caps. But in model portfolio, we are slightly different where we have 3 strategies, and again, the weights are different. So the underlying philosophy is same in both, but depending on the weightages and the allocations, the stock recommendation might change, but the pool of recommendations will always be same. So what will happen is whenever you're doing add cash, first it will try to allocate within your stocks. If you already hold good stocks, buy a strong buy rated stocks, it will first try to allocate in these stocks, and if still the cash is remaining, then it will go to new stocks. So it is kind of similar in both cases.
Okay. There are a couple of users who are asking for the Infinab links. I'll just provide them in the chat box. Going to the next question, it's from Jitendra. Will it be possible to have a section called potential multi-baggers for us to track the stocks that fall in the sweet spot, similar to how we have for stock of the month section?
Well, what you can do is you can build screeners around this. Now, for example, if you go to the screens, there are some pre-created ideas already created, like turnaround stocks or potential turnaround stocks. Now, let's say I go to turnaround stocks. Now, these are the stocks where the financial used to be negative, and now they have turned around the performance and have become the positive stocks. So let me just try how they've done. So these are the stocks that used to be negative, but now has become positive. So you can create these kind of screens in the screen, depending on the financial trend and the performance and what has the market rewarded, market has not rewarded these companies. You can make all kind of these screens. So you can see how this turnaround has happened. So you can build the model. You can build model like this was negative for some time and now it has become positive. For example, if you go to the potential turnaround idea, these are companies that are not yet positive. They were negative. They've just become, let's say, flat, but they're still not positive. For example, this company, Andhra Paper. So it used to be negative. It has just become positive. So this is a potential turnaround. So the negative started coming down and it has now become flat. Similarly, Himadri Special. It was negative. Then now it has negative was reducing. Now it has become flat. 5 is flat. So if this continues on this trajectory, then it will become multi-bagger. So you can have these screens, or you can even build your own screens around this.
Rajesh has 2 questions. One being, until when this particular offer will be valid? And the second being, let's say if I do not want the second option, that is the mutual fund, what will I miss on?
Sure. So till when this will be valid, what we do is whenever we launch an offer, we have very limited slots available. And the offer continues till the time the slots are open. So, it's possible the slots get filled today. It's possible they get filled after 1 week. I don't know. But, depending on when the slot gets filled up, the offer will close. So if you are looking to subscribe, please don't wait. In terms of mutual fund, what you will miss. Currently, what we've done on mutual fund is we are rating every fund, and we're giving you if it's a good fund, what's the rank within the category, what's if it's a buy, if it's a sell, we'll give you that rating. In the future, what we are going to launch is the model portfolios on mutual funds and your entire wealth optimization. That's not yet launched. We're still working on those models, but the rating on mutual fund is already live on the website. So if you're not going for that pack, you will miss that part. But all the other features of Markets Mojo in terms of the Mojo stocks, the model portfolio, or stock of the month, screeners, rating on each stock, all those will be available for you in 1999 videos.
Okay. A question from Mr. Ravi. Hi, sir. Is there a mechanism where we can see only strong buys or buys in spite of Mojo stocks which are already listed in our portfolio? And if there is not, can you make a provision for this?
You can straight away go to the Mojo stocks section. In Mojo stocks, you will get all the stocks which are buys or strong buys, plus they've gone through a qualitative assessment. If you click on, so this is like a card concept. If you go to the current list, this is like a table. So you can sort the companies by score, and you can get, which are the top rated stocks. You can sort them basis what date they became Mojo stocks, how much returns they've given. So latest entry to the Mojo stocks section, let's say, was Tube Investments on 16 September. So you can do all these kind of sorts in the table itself.
Okay. Question from Vikram Singh. I have created 3 model portfolios in the last 2 months. How to consolidate all these 3 into one aggressive portfolio?
Okay, so if you've created 3 portfolios, what you can do is you can see which are the overlapping stocks. You can maybe create a new aggressive portfolio, and you can see which are the overlapping stocks, and let's say not buy those, and the other ones you can then sell and put the amount in that aggressive portfolio. But if you are following a model portfolio, I really say that you don't have to really consolidate in one portfolio, because we are tracking each and every portfolio separately. Whenever a change is required in any of the stocks in the portfolio, we will anyways come back to you and tell you, now you have to sell this stock and buy the other. So we are tracking all model portfolios separately. We will alert you whenever change is required. So you don't really need to consolidate in one portfolio, because all these portfolios individually are good.
Okay. Mr. Stanley has this particular query. Mr. Mohit Batra had communicated in the webinar that we will be allowed to insert the actual buy price in the model portfolio without touching the stock or the units or the date, etc. When can we expect the same?
So, that is still some time away, because it is getting a little complicated to kind of allow that feature, because what we realize is if we start putting that feature in, then the performance of your portfolio versus our put versus the actual model will be very different. And because people might not enter the trade, or they might enter the trade after 1 week, and they say, or they don't want to sell that stock. They say sell HDFC Bank. People say I don't want to sell HDFC, and they don't enter that trade. So the performance of what we are tracking and what should be there will be very different, and that's why we are finding it a little difficult. But what I will tell you is a better way to do it is create another portfolio in the analyzer section. There, put the actual trades that have happened. So you'll be able to compare the virtual portfolio performance versus your actual performance on a real-time basis. So that I think that will be a very good starting point. So we create another portfolio in the portfolio analyzer section, keep it separate, mark it as model portfolio, and put your actual trade in there.
A question from Mr. Jitendran. What can we expect from the technical product? And could you also please elaborate, if possible, on it?
Yes, so we are working on a technical product wherein we're looking. So right now, I told you our technical is not very short term. It is a slightly longer term trend model. What we're working on is a slightly more shorter term, where we'll be giving target price and stop loss on every stock. So that is what we're working on in a technical product. We are working on it. It is already done the first level of development and we're in the first level of testing on that product. So whenever we launch a product, it has to go through extensive back testing to make sure that we have a high success rate on whatever we're saying. So it has already gone to the testing phase and we are testing the product out. It is going to be short term. That'll give you target prices and stop loss and signals on all stocks. Now, whenever you subscribe, all the future products will be part of your subscription. And what has also happened in the past is whenever you launch new features, the prices do tend to go up. So if you are looking to subscribe, and I would say very strongly that please use these offers because these prices will not be there in the near future.
Okay, I have dropped the links in chat box as well. Going to a question from Mr. Sahil Shetty. Why some stocks have higher Mojo score, but not Mojo stocks, and vice versa? Also, by a longer period, what are you referring to?
So why all highly rated stocks are not Mojo stocks? Because like I said, they have to pass through some additional filters, and on top of that have to be approved by the investment committee to become part of the Mojo stock list. And that's why not every highly rated stock will be part of the Mojo list, because there might be some liquidity issues, or your investment committee feels that business case is not very strong going forward. They may not include that stock. Also, there is a cooling off period. A stock might go out of the Mojo stock list, and then for some certain period it is not eligible to come back to the list. So that's why maybe a stock that initially turned out and then it is not coming back for that reason. Sometimes that is also possible. By longer period, when I'm saying is in I think we're referring to this slide of the inflection point that we saw. So we saw that stocks which have been Mojo stocks for 3 months or more have tended to give higher returns even going forward, rather than stocks that have gone out in a shorter term period. So stocks which have remained Mojo stocks for long period, more than 3 months, plus have done well in this period, have given even higher returns going forward.
Okay. A question from Chandru. We are buying this subscription for, let's say, more than 10 years. Can we get the model portfolio?
Sorry, if you find buying the full pack, then the model portfolio will be part of that. There are 2 packs on the website. If you go, there is either only model portfolio or only stock research, or a combination. There are 3 out there. What we are telling here is the combined, which has the model portfolio as well as all the other features like Mojo stocks and stock of the month, research on every company. So if you subscribe for the full pack, then the model portfolio will also be included in this.
Sorry, a question from Ms. Johnson. My exposure to equity is 98 lakhs, of which 14.5 is in the modern portfolio and 12.5 is in the Mojo portfolios. The rest is in random purchases. I have another 27 lakh to be invested. With current volatility, how much should my phase-wise investment be, and how much should the gap between the investments be?
So this is really a market timing question. Let me tell you, no one has been able to time the market. No one expected the market to fall so sharply during COVID, or to come up so sharply without any change in fundamentals. But market does behave in irrational ways a lot of times. Again, no one can time the market. You should invest when you have the money. Invest for a long-term horizon. Invest in a disciplined manner. So in the short term, there might be volatility. You might even lose money in the short term, but you have to have a long-term horizon. Invest, and invest in a disciplined manner. That's all I can say. I really cannot help you with timing the market, because trust me, no one can time the market. What we will help you do is, at any point of the point in time, we'll help you find the right stocks, the highest rated, the fundamentally and technically sound companies, and hope that they do well in the future. But no one can predict where the market is going.
A question from Ratnesh Chauhan. If a stock hasn't performed in a month's time and going downwards, should we get out of it?
Yeah, as long as the stock is still a highly rated stock, we're not advised to go down. What we do is we factor the fundamentals of the company as well as technical, so that all is combined in the call on the company. As long as the call on the company is good, is buy or strong buy, please continue to hold it. If the call changes, we will come back to you and alert you that, okay, now the stock has gone out from the buy list, it has become a hold or it's become a sell, and then you can take an appropriate action.
Question from Prem Kumar. Hi Karan, I have created an aggressive model portfolio. I had 10 stocks where I added further money. The deployment happened across only 9 stocks, which is fact highly rated and doing well. Any particular reason? Also, score of Infosys just dropped from 80 to 72 in a matter of 1 to 2 days. Can you help me with why such fluctuations happen?
Sure. So when you're adding new money, what happens is it will first try to allocate within all the 10 stocks in the same proportion. Sometimes the stock is not in a new buy list. So it is a hold for people who already have it, but it is not recommended for new buying. That can happen, let's say, if the liquidity parameter of the stock change. So people who already have it is fine, but we're not saying asking you people to buy it. Or some other factor, like let's say the result of the company is due in the next 10 days. So we'll not ask people to buy that stock. So for some reasons, the stock can be part of the hold list, but not for the new buy list. So that's why maybe it's not allocated to the 10th stock, because it might be the case in that stock. The other is stocking from 80 to 72. Now, on a daily basis, two things can change. Either the valuation can change or the technical can change, which can affect the stock call on the stock. But again, we are looking at the stock from multiple angles, and these fluctuations can happen because of the technicals or valuations. Even in these cases, the technical valuation is not a very, although they're calculated on a daily basis, they're looking at a slightly longer term trend. That's why the call can change. But we are monitoring these calls for you. And if there is any change, we will come back to you and tell you to take a corrective action.
Okay. Question from an anonymous attendee. If you tell me to sell a stock or buy a stock in model portfolio, how the same is done in a model portfolio? Okay. Will you change in the portfolio and then I have to execute with my traders?
Model portfolio will automatically update. So what happens? It's a virtual portfolio. So if we tell you to sell a stock, and it will automatically exit the stock at the last available price. So it will be the day in price, and because next day the stock can open higher or lower, we don't know. So we'll assume that it happened at the last available price, and we'll tell you that, okay, exit the stock, and over the next 1 or 2 days, we'll tell you what to buy next. Again, virtually, it will get automatic update automatically. What we're expecting is you're following it in a disciplined manner, and you execute at the whatever earliest you can at the best available price. And you please maintain that in, like I said, a portfolio and as a create a new portfolio. So you can compare what the virtual portfolio performance is versus your actual portfolio performance. We do not execute the trades. You have to do it with either yourself or through your broker. Again, whoever you broke with, if you broke with a full service broker or a discount broker, completely your choice. We do not make any money off your broking. We're only here to advise you in best possible manner of what is the right strategy or what the right stocks are.
Okay. Question from Mr. Pramod. What are the other products coming in this offer for the next 2 years?
I cannot give you visibility for 2 years, but some immediate things that we are working on is first is the technical product, which we mentioned. Next is the mutual fund model portfolios and the wealth optimizer. Those are the immediate products that we are already working on. And but we constantly keep innovating. We keep launching new products. Some ideas we do have in the pipeline of FNOs and IPO products, but those have not. I cannot really comment till the time we start developing those. But yeah, these two things which are really in the near pipeline is technical product and mutual fund model portfolios and the wealth optimization.
Okay. Question from Jaideep. Let's say if the market falls 25%, is this a good opportunity to invest, or shall we wait again?
Again, time in the market. If the market falls 25%, no one knows if it's going to fall another 25% or if that's the low. No one can time the market. See, what I'm trying to drill is, do not try to time the market. You invest when you have the money. Invest in a disciplined manner for a long term. In the near term, you might lose money, but if you're investing for the long term, you will make up money if you're investing in the right stock. So you should have a long-term outlook. In the short term, your market can go anywhere. So that's what I say. No one has been able to time the market so consistently. So we don't even try. At any point of the market, we are here to help you with the best available investment opportunities in that market scenario.
Okay, there are a couple of questions on the offer. I'll just add both. One is, I have subscribed up to 2027 with model with MF, that is mutual fund. Is it possible to add for another 2 years without mutual fund?
Yes, you can. You can do that. If you take this 2 year pack, so what will happen is till 2027, it is with mutual fund, and after that, it will be without mutual funds. That will automatically happen.
Okay, and the second being from Vishal, when we say 19,999 for everything minus MF, that is mutual fund, does it include other products coming in the future like technical, etc.?
Yes, currently it does. All the future products coming on the stock side will be part of this, but all the future products coming on the MF side, like the MF model portfolios and the wealth optimizer, will not be part of it.
Okay, taking a final question from Ms. Johnson, this is regarding the HNI product. When it is offered, can I migrate if I have the investments already?
Yes, you can migrate. Migrate in the sense there will not be again handling the money for you. So if you already have money, let's say in other stocks, you can sell those stocks and buy these other stocks. Or what you can do is whichever are the common stocks, you can continue to hold it, and rest you can shift to that other stock. So HNI product is an offering that we're working on, which will have a higher ticket size and it will have a different strategy, and will it will be a personal connect there where we'll be guiding you where to invest and which is the right strategy, looking at the market scenario. So if you are interested in that, you can drop us an email, and we are currently gauging the interest of the user. We've received very high interest from a lot of users, and we'll be selectively taking up only a few users for that in our initial launch. So if you are interested, please send us your details, and that product is we are planning to launch in the next month.
Yes, sir, that's it with the Q&A.
Thank you very much. Thank you for joining us today. Before we leave, I just want to reiterate 19,999 for 2 years if without mutual fund is a very, very attractive offer if you're looking for this. Yes, okay.
Just one question on the HNI itself, it just came up. Can HNI services will be provided for the US markets as well?
Currently, no, but that is one of our projects. So first is India product, and then we'll have a India and US combined product also in the future, but currently it is only India.
So thank you all for attending this event, and I hope you have found this informative and helpful as well, and I've cleared the doubts as well. I have dropped the links for the offers, and today we have an upcoming webinar at 7 p.m. by our CIO, Mr. Sunil Damania, who would be providing us insights and his information on Tata Metallics and Tata Steel Long products on its current market status and whether you should buy them or you should make an exit from the same. Looking forward to see everyone.